Joining us now with the view from Europe is Stephen Morris, banking editor with the Financial Times in London. Stephen, welcome. Good to have you with us. What's going on with Deutsche Bank and why today?
Well, Deutsche Bank is really a casualty of the general fear that we're seeing in markets at the moment, which started obviously with the collapse of Silicon Valley Bank in the US and then spread and provided the backdrop to this extraordinary collapse of Credit Suisse over last weekend, which we chronicled extensively in the Financial Times. Traders and investors around the world are looking for the next weak link in banking, and Deutsche has been a perennial underperformer, racked by scandal, although recently it has been on better form. However, today it's really traded off, as you said before, strongly, and credit default swaps rising, its share price falling. So I think it's just people probing to see where the next weak link might be. But there's no suggestion that anything's happened in the last 24 hours for Deutsche Bank to be a particular source of weakness or a fear of collapse.
In Europe, do people and do bankers blame the U.S. and U.S. regulators for what they are feeling today in their banks?
I don't think anyone in Europe is actually blaming the U.S. It certainly provided the backdrop for what happened to Credit Suisse, particularly last week. But I think Europe has had its structural and scandal-related problems for a long, long time. There has been a little bit of sniping, to be honest, from Europe and the UK. The governor of the Bank of England said that they warned US regulators about the deposit concentration risk in Silicon Valley Bank before it collapsed, and nothing happened. We've also seen a bit of criticism about the US changing its rules to protect depositors over $250,000 in Silicon Valley Bank by arguing it was systemic. So I think there's more disagreement on the regulatory front, but whether Credit Suisse would have survived absent anything in the US, I think is still up for debate. I think Credit Suisse caused its own demise.
And Stephen, where do we go from here? Because it was also obviously the European Central Bank raising rates by 0.5 point. So why aren't they more perturbed about these issues?
Well, they're just as worried about inflation as they are about the stability of the banking system, and sort of rowing back on any of their direction at the moment would probably have a wider impact on society. The party line from everyone from the Chancellor of Germany to the head of the Bank of England to politicians across the continent is that the banking system is safe and secure, liquid and well capitalized, and there's no reason to worry. But as you know, that's what Credit Suisse was saying, and indeed could prove before it collapsed. So it might not necessarily be a cure for market panic.